Is this the end of Pi Network's rally or the biggest bull trap of 2025? While the weak hands panic sold after yesterday's 30% drop, the smart money is silently accumulating. What they've spotted on the charts could make early investors rich while everyone else is running scared. What's up, crypto fam? Gold Rush here with a time-sensitive update on Pi Network that you absolutely can't afford to miss. Today's analysis might be the difference between catching Pi's next leg up and watching it moon from the sidelines. Welcome back to Gold Rush Crypto Daily, where we cut through the noise to bring you the real opportunities in crypto. If you're new here, smash that subscribe button and hit the notification bell because these urgent market updates have helped our community stay ahead of the crowd time and time again. Before we dive in, I want you to know that this isn't just another buy the dip video. What I'm about to share is backed by serious technical analysis and chart patterns that have accurately predicted some of the biggest moves in crypto history. Let's set the scene. Pi Network exploded by 130% last week, blasting through the 75 cents resistance level and climbing all the way to $1.67. But just as quickly as it pumped, Pi got rejected at the critical $1.40 resistance and has since dropped by more than 30%. The crypto Twitter echo chamber is screaming dead cat bounce pump and dump and it's over, but I'm looking at a chart pattern that tells a completely different story. First, let's address the elephant in the room. Yes, Pi got absolutely demolished at the $1.40 resistance level. That long upper wick on the daily candle is textbook rejection, and it's got a lot of traders running for the exits. But here's what most retail investors are missing. Pi just completed a textbook Wave 3 extension with a Wave 4 correction now in progress. For those of you who aren't Elliot wave theory ninjas, let me break this down in simple terms. What we're seeing right now is actually a healthy pullback after an extended rally. The chart is showing a higher low pattern that formed on May 8th, followed by that explosive breakout above 75 cents that changed everything. In my professional analysis, this drop is actually bullish AF when you zoom out and see the bigger picture. Pi is still up over 80% from its April 5th all-time low of 40 cents, and the overall structure of the rally remains intact. Let me share my personal take. This rejection and drop is the market's way of shaking out the weak hands before the next major move. I've seen this exact pattern play out dozens of times in my years of trading. The masses get euphoric, the price gets rejected, everyone panics, and then the true believers who held through the dip are rewarded with the next leg up. If you're finding value in this analysis, do me a quick favor. Smash that like button and drop a comment with your Pi price prediction. Your engagement helps this video reach more crypto enthusiasts who need this critical information. Now let's get into the meat of this analysis, the Fibonacci retracement levels. The $1.40 resistance isn't just a random number. It's both a horizontal resistance from previous price action and a key Fibonacci level. The fact that Pi was able to briefly break above it to $1.67 before getting rejected actually demonstrates the underlying strength of this move. According to our Elliot wave analysis, Pi is in an extended Wave 3 with the ongoing retracement part of subwave 4. If this count is accurate, and the chart structure strongly suggests it is, then the next move is another push upward that should take Pi to at least the 0.618 Fibonacci retracement level of $2. But wait, there's more. The Pi Network has established something incredibly bullish on the chart, a clear trend reversal. When a crypto bottoms out and then forms a higher low pattern like we're seeing, it's often the foundation for a sustained uptrend. Pi has not only done this but has also broken through both short-term and long-term resistance levels. Think about it. Pi crashed 85% from its listing price, hit rock bottom at 40 cents, and has since been building a solid foundation for recovery. The fact that it just rallied 130% in a single week shows the explosive potential when Pi breaks key levels. Now I want to talk about what I'm personally doing with this information. While I can't give financial advice, I can tell you that historically, these Wave 4 corrections typically retrace between 38.2% and 50% of the preceding Wave 3. That would put Pi somewhere in the 90 cents to $1.05 range before the next move up, potentially creating an incredible entry opportunity for those who missed the initial breakout. Here's my prediction. Pi will find support in that zone, consolidate for a brief period, and then make another push toward the $2 level. This isn't blind optimism. It's based on the clear technical pattern forming on the charts. For those panicking about Pi's drop, remember this. Bitcoin itself has had 80% plus crashes throughout its history, and each time it's gone on to make new all-time highs. Volatility is the price of admission in crypto, especially for emerging assets like Pi that are still establishing their market footprint. To wrap this up, Pi Network's rejection at $1.40 and subsequent drop is not the end of its rally. The technical evidence suggests we're merely in a wave 4 correction before the next push higher. Based on Fibonacci projections and Elliot wave theory, Pi still has a clear path to the $2 target if the pattern completes as expected. I want to thank each and every one of you for tuning in to today's urgent analysis. If you found value in this breakdown, please share this video with your crypto friends who might be panicking about Pi's price action. If you're new here, hit that subscribe button and notification bell so you don't miss my next timely update. I'll be watching Pi's price action closely, and will let you know immediately if the technical picture changes. Also, check out my previous video on market psychology during corrections. It explains exactly why most retail investors consistently sell the dip right before the next rally. This has been Gold Rush with Gold Rush Crypto Daily, bringing you the analysis that matters when the market gets turbulent. Remember, while I'm optimistic about Pi's technical setup, this is not financial advice. Always do your own research and never invest more than you can afford to lose. Until next time, stay strong through the volatility. These dips are where millionaires are made.